Okay, this is part two. The camera evidently shut off on me, so we're going to have to keep a close watch to see that it doesn't shut off on me again. Um, let's take a look. I don't know what happened there. Okay, so we're about to talk about what is a standard deduction versus itemized. The 2019 standard deduction for someone that files as a single person, the standard deduction is $12,200. That'll shift from year to year, usually more. This was a big change from a few years ago, but now it's $12,200. What does that mean if the standard deduction is $12,200? Well, at the end of the year, you're going to get all your information together, your financial information together, because you're going to file your federal tax return. You're also going to file a state return, but you're going to file your federal tax return. And you're going to put all the information that you have during the course of the year, how much income you had from all your sources, and how much you paid in taxes. And the difference, of course, if you paid too little, if you earned much more than what you should have paid, well, then you're going to have to pay, right? If you earn much less than what you should have paid, you're going to get a refund. Now, how does this factor in? Well, if during the course of a year you have $15,200 in income, right? And that's what goes on your tax return. Let's say you've earned, putting all your jobs, your sources of income, and you made $15,200. Every single person gets to deduct $12,200 as a standard deduction. So that means even though you made $15,200, you're only going to pay tax on $3,000. See, the government decides that, well, $12,200 is not a lot of money, and if a person just earns $12,200, should they really be paying tax on that? Here's a case where somebody made more than that, but they get to take the standard deduction. Everybody gets to take the standard deduction. So in the course of a year, if you made $10,000, right, and if you paid tax over the course of the year, some way, shape, or form, okay, when you file your tax return, right, you get to take a standard deduction. So if you earn $10,000 and you take that standard deduction, if it's zero or less, right, if it's zero or less, that would be a negative number, okay, you would not owe any taxes according to the tax code. So you wouldn't pay any money on you. So if you did pay money, if money was federal income tax was taken out of your paycheck, file a tax return and get whatever money you paid in income tax, get that refunded back to you. And that's how the standard deduction works. Everybody gets that $12,200 standard deduction. Okay, now how does the itemized deduction work out? Now, some folks think the itemized deductions are loopholes, but when you look this up, you got to see that there's a page of itemizing your deductions. And what are some of the major categories? This is one, mortgage interest. By the way, whether you agree with this or not, it really doesn't really matter. That's the law, the way it works out. Mortgage interest. So if you bought a house and you borrowed money on the house and you paid it back, but in the beginning, a lot of that is considered interest, because every payment you make, some of it goes to principal and some of it goes to interest. Well, in the early stages, mortgage interest could easily, depending upon how much you borrowed, of course, easily be $10,000. Okay? Now, if you're itemizing your deductions, that still doesn't get you past that 12,200 standard deduction, but that's a big chunk of money right there. Okay, and now another item that they have, and you had to pay attention a couple of years ago when they changed the rule. SALT, state and local income taxes, and state and local taxes. That's actually the name, state and local taxes. So they're talking about the state income tax is deductible from your federal tax return. So New Jersey or New York, depending where you are. Local income tax is possible. New York City has an income tax. Okay, New York City residents. Okay, and then property taxes. If you own a home, you would also pay property tax on that. Now, how would this shake out? It would vary greatly, but it wouldn't be unfathomable for somebody to easily pay $2,000 in state income tax, probably more or less, depending, but that's a pretty conservative number in New York and New Jersey. Let's even say, okay, we don't have local income tax and it gets paid through property taxes. If you live in Bergen County, northern New Jersey, anywhere near here, on even a modest home, property taxes could easily total $10,000. So you can see, just by itemizing your taxes, your deductions, instead of just taking that 12,200 standard deduction, but by itemizing, that's what that's called, itemizing, by listing some of the various deductions you can utilize, you can see you've already exceeded the 12,200 standard deduction. Okay, what were some of the others? Medical expenses. Now, there are some parameters. You can't just go ahead and deduct any type of medical expense. There are pretty strict guidelines, and even there, the medical expenses have to exceed a certain percentage of your adjusted gross income. So you wouldn't be able to deduct every medical expense you have. But if it exceeds a certain amount, and even if it exceeded just $1,000, well, there's $1,000 in medical expenses that can be deducted from your federal income, taxable income. What else can? Student loan interest. This would be something that might be important to you. Student loan interest. Again, certain parameters involved there, but still, $1,000 just in interest over the course of a year, not a big number to attain. Charitable contributions. Charitable contributions. You donate money to your church, the Red Cross, March of Dimes, wherever you decide to contribute money. That would, again, you'd have to consult with a tax advisor on that, but what might be considered charitable. Easy, it wouldn't take somebody who's too charitable to contribute $2,000 a year in charitable contributions. And then there are these IRA, individual retirement account, or 401k retirement contributions that can also be deducted from your income. And let's keep it, when it comes to this, folks are allowed to contribute a significant amount toward an IRA, but we'll just, for argument's sake, say contribute $6,000 to your retirement account. And there you have it. All these itemized deductions, which are not unreasonable. I don't think I made this up too far-fetched. But if you added this up, 10, 12, 22, 23, 24, $32,000 in itemized deductions. $32,000. So that $32,000 in itemized deductions, okay, far exceeds the $12,000 standard deduction, right? far exceeds that. I'm just checking on, every once in a while I'm checking to see if my camera shut off. And, well, what does a $32,000 itemized deduction do for you? You might say, well, what's the big deal? Well, if you made $92,000 this year, and that was all the income after all was said and done, 2019, you made $92,000, you could deduct $32,000 and then pay tax on just $60,000. You're going to pay tax on $60,000 as opposed to $92,000. Now, you might say, well, I'm still paying a substantial amount of tax on that $60,000, and I would agree. That's a significant amount. But when you study the tax brackets, and you've studied them and looked at them, that once you're up in this range, you're paying 22%, 22% tax on this. And once you exceed that, you bump even into the 24% bracket. Well, let's just suppose even here, you reduced your taxable income by $32,000, and you saved yourself 22% tax on that number. That comes out to around $7,000. You just saved yourself about $7,000 on that. So a significant amount of tax savings. So instead of paying tax on $92,000, you paid tax on $60,000, the difference being $32,000. That $32,000 would have been taxed at this, and it saves you $7,000 in taxes. A sizable chunk of money over the course of a year. So that's the way standard deduction versus itemized deduction works in a nutshell. Now, some expert, some tax advisor, tax accountant would say, yeah, you kind of skirted around a few topics there. I'm not trying to advise you tax-wise, but I just wanted to give you a sense of how tax brackets work and how standard deduction and itemized deductions work. So when you hear about people saying, well, that's a tax deduction, these are the kinds of things that they're talking about. Okay? So that'll be it for today. I have to put this as part 2. There was a part 1 of the video. Somehow it got chopped off. But this is itemized deductions, standard deductions. Okay? And there'll be an assignment you'll see posted today as well. It's Wednesday, the 25th. All right? Good luck. Hang in there, folks. And I can't wait to get back into school and get going again. All right? So hope to see you sooner rather than later. Take care.